culture is really, really important. I find culture in both my own team, but also the businesses that we partner with is very key. In business, we all need to have tough negotiations, but you always want to make sure that people are being fair as well. We don't need to be best buddies and go to the pub every night, but we do need to really respect each other and, enjoy being in each other's company. But I think a lot of that comes down to sharing similar values.
Laura Dillon, thank you very much for joining me.
Thank you very much, Conor. I'm delighted to be here today.
So let's start with Waterland. What is it? What do you do? Who the investees are? Anything you want to share on that side?
Great. Well, Waterland is a pan-European private equity firm, and we were established 25 years ago by a Dutch entrepreneur called Laura Dillon in Holland, very much with the ethos of partnering with business owners and entrepreneurs to help them scale their companies faster than they could do from their own internal resources. And over the course of the past 25 years, we've now built the business to 13 offices in 11 European countries. And indeed, in the heights of the COVID pandemic, in March 2020, I actually opened our Dublin office. So we've got these 13 offices in 11 markets. We invest out of the same fund. So we have a pan-European fund. We're currently investing our 9th fund, which is a large fund. It's a €3.5 billion fund, but we invest that across the entire of Europe. And very much what we look to do is partner with business owners and entrepreneurs, family-run companies, management teams who are looking to bring in a partner to help them both de-risk, take money off the table so that they can personally diversify their wealth, but also really support the growth of their business. So we normally do that through not only supporting our organic initiatives, but also through really supporting them with buying other businesses across Europe to become European leaders. And we'll come on and talk about it, but we've now supported 5 platforms here in Ireland, and some of them are really becoming, clear European leaders, which is fantastic for Ireland.
Talk to me a little bit about platform businesses, the type of investment, and I suppose you've alluded to a little bit there, but why for Irish businesses why is that an opportunity for you doing what you're doing now in Ireland?
Yeah, so what we define as a platform business is a new business segment for us to get into, I suppose, and a new company management team that we can ultimately help to become a European leader, and that we can then support the management team to acquire other businesses. So we look for a business that's established, right? So we don't do early stage. We're not a venture capital investor. We're kind of traditional private equity, which means these are established companies, probably for 10 years plus or so, where they may well have been in families for multi-generations or so. And ultimately, they're mature, they've got systems, they've got processes, they've got a stable management team, and ultimately they're already generating good cash flows. So for us, it's probably companies that are making more than 4 million of profit or so on an annual basis. You might say, well, if they're already profitable and already making cash flow, why do they need you guys? And the answer typically is there might be succession in the business. So maybe the grandparents or the parents or some of the siblings maybe want to go and do something else. So they might want to sell their shares. Or maybe it's that the family want to de-risk and take money off the table so that, hopefully everything goes well. But if things go a bit less well, they know that their personal wealth is diversified. But normally it's also because there's someone, normally the CEO, who is very ambitious and really wants to scale the company. And we will come in and support that growth, not only with capital, but also with resources and really with the ability to support them to acquire other businesses. And we will do a lot of the kind of heavy lift on acquiring those other businesses. Most of the companies that we've partnered with here in Ireland, the CEOs have said to us, we like the idea of acquiring other businesses, but we've never done that. So we need your support. And we say that's absolutely fine because that's where we really can support the businesses.
Why 4 million? Is there something to do with being able to...
4 million is probably just as a scale, right? We have a large fund that we kind of want to invest, I suppose. And we see that as the threshold of probably being the level of maturity that we can support the business. Because ultimately, when we come to exit the business, we want it to be multiple times the size of that. So, so we kind of say, what? We want a business that is ready or that is already able to scale. So has systems, processes, people, team, team in place, I suppose, and has that maturity that ultimately they will be able to absorb other companies and ideally able to expand internationally as well.
So you'd prefer, well, I don't know, maybe it'd be a deal breaker if there wasn't a CEO in there with a kind of an ambitious plan or desire?
So I think, we could work with them to find that CEO, but ours is a partnership model. So we typically do not acquire full businesses, right? We typically acquire, a majority stake in a business, which is typically anywhere from 50 to 80%. So we really want to be partnering. So we then need to make sure that there's someone there who's going to drive the business on a day-to-day basis. We're there to support in the background, but ultimately it is the management teams of the companies who are the ones that are then going to be doing the day-to-day management of the company. Where we get involved is we get very involved in the acquisitions. We will, of course, join the board. We typically have 2 board seats. We'll support with all the financing. We'll put robust processes in place around governance. We have these 13 offices across Europe where we have local level support. But ultimately, we don't want to operationally meddle in the business. We want someone who's actually, really has the desire to build their own team, build their own business, and we want to be there in the background to be the facilitators and supporters of that.
You've an interesting background for someone in private equity because you've been an operator of a business before. Can you tell me just a little bit about that, how that went, and ultimately why you went back into private equity afterwards?
Yeah, it's a good point, Conor. My father used to say to me, Laura, will you just get a steady pensionable job, So I've definitely done a bunch of different things throughout my career. And I think a lot of that actually came from my parents and my grandparents and a lot of my aunts and uncles that we spoke about earlier. I come from quite an entrepreneurial background, I'm first generation of family who's gone to university, I suppose. All of my kind of broader relatives were very hardworking. They were all entrepreneurs. But I suppose they really showed me that doing different things, I suppose, and having that entrepreneurial flair and being commercial is very good. So I really liked kind of maths type and science subjects at school. So I ended up studying chemical engineering up the road in UCD. I really enjoyed the challenge of kind of solving problems and everything, but I spent a summer working for Pfizer Pharmaceuticals before I graduated down in Ringaskiddy in Cork doing commissioning and validation of one of their plants. And after that summer, I decided I didn't really want to be a chemical engineer forever. So then I had to decide what I was going to do. So back 2001, I moved over to London and I joined McKinsey as a strategy consultant, which was a fantastic training experience. I learned so much about business. I got to work on projects not only in the UK, Ireland, I got to go to the Middle East, I got to go down to Australia, and I worked across multiple sectors and different kind of marketing to strategy to operations to organization. So I really learned a huge amount. But at the end of the day, I still came back to my engineering roots where I liked getting things done. And as a consultant, I felt I was advising companies as opposed to really being the one responsible for getting things done. So I was very lucky. I decided that I wanted to, first of all, I took 4 months. I went down to Mozambique. I worked as a volunteer down there trying to build businesses in Mozambique and Zimbabwe. And I think one of my key learnings there was that there's a lot of great people down there, but they needed a lot more support, I suppose. So that was a great way to see building businesses in a developing country. At the time, Mozambique was the poorest country in the world. And then decided I needed to come home, get a real job. Again, that paid money. So I went up to Edinburgh. I joined Intelligent Finance, which was the internet bank part of Halifax Bank of Scotland. And I worked there for nearly 2 years. Internet banking 20 years ago wasn't quite what it is today. So that was a really good experience kind of working in an early stage internet bank and internet company. But I think that highlighted to me that I probably didn't want to work in a PLC forever. So that was part of Halifax Bank of Scotland. So I then decided to go do my MBA over in Boston. So I went to Harvard for 2 years and I focused on entrepreneurship and finance. And during my summer of 2006, I was way too eager. I came home and I did 2 different internships. One here in Ireland working for Jim Barry, who was running NTR National Toll Roads at the time. And they were doing a lot of renewable energy investing. So that was my first taste of really being on the investor side as opposed to the advisor or operator side. And then I also went to London and I worked for a mid-market firm called Cabot Square Capital. Which again, they were focusing kind of on finance and healthcare investments in the private equity space. So when I went back and to finish my second year, I had a big decision to make. Would I go back to McKinsey, who luckily had supported me through my MBA? Would I try and get into private equity? And I remember sitting down with my poor mother and father when I was making this decision. I came home Christmas 2006 and I told my dad that I was thinking about not going back to McKinsey. And his two comments were to me, Laura, they're a good firm. They've paid for your MBA. You should go back to them. And his next comment was, you do know I'm not paying for it if you choose not to go back. So I said, I understand all of those concepts, Dad, but I think I really want to move into private equity. I think I want to be a bit closer to the operations and have a bit of skin in the game. So when I graduated September 2007, I decided to join Apax Partners, who at the time was the largest private equity firm in Europe. It operated globally, and I joined their London team. And I have to say, I seem to join firms at unusual time periods. My older brother used to tell me if I was moving jobs that I needed to let him know, because the week I joined Apax Partners in September 2007 was the run on Northern Rock Bank. So it was the beginning of the global financial crisis. My first role at McKinsey was literally the week of 9/11. And then the week that I joined Waterland in March 2020, the 16th of March 2020, was literally as we all went into COVID lockdown. So interesting timings. But I had 2 years, or just over 2 years at Apax Partners, where I learned all the traits of private equity, I suppose. It was a very large fund. So at the time we had a 10 billion fund. We were doing kind of what I would define as large cap deals. So very, very big deals. We were investors in the likes of Summerfield Supermarket or New Look, the fashion store, and multiple other businesses. But they were kind of very, very large deals. And I found that I really wanted to work with smaller companies, and I also wanted to try being an entrepreneur. So I took another big risk in 2010, and I decided that I wanted to move home to Ireland and I wanted to set up my own business. I managed to convince my father, who at the time was 70 and was retired for 5 years, but he had worked for a business called TP Wheelahans and had been in healthcare distribution for 40 years or so, that there was a good opportunity for him and I to set up a business. So we literally in 2010, we rented a warehouse in Baldoyle Industrial Estate in North Dublin, bought a forklift, and we literally managed to secure a number of agencies that would give us their exclusive distribution rights for Ireland, largely on the back of business that Dad had done with them for many, many years. There'd been a few transactions in the Irish market, and some of my dad's old sales team actually came and worked for us. We approximately knew that we would be able to make this business profitable. We knew how much we'd have to sell. And literally we started bringing in products and selling it into primarily pharmacies. So we were supplying healthcare products, non-medicated, so they were not regulated products, into mainly pharmacies. But Ireland is, for example, the highest per capita user of fake tan. And back in 2010 and the early 2010s, we were supplying nearly all of the fake tan into Pennies or Primark. There's an expensive, brand. We were selling a more value-orientated version, So I have to say, and we were lucky, we grew that business to supply nearly every pharmacy in the country with shampoos, conditioners, fake tan, perfumes, aftershaves, and many other products. But I have to say, it is the hardest I have ever worked. It's given me a huge amount of respect for all business owners and entrepreneurs. It was, starting a business in 2010 was difficult. I was personally having to give personal guarantees to the banks in order to get financing and invoice discounting facilities. It made me realise that entrepreneurs are taking real risks, I suppose, and hence why it's now made me a much better business partner for the companies that we partner with. So it was a great experience. Also working in a family-run business with my father. We occasionally roped my mother in as well. We had a sales team. We had guys in the warehouse, and I have to say, it's probably actually one of the experiences I've learned the most from throughout the course of my career. So over the course of a couple of years, we built that business. And we looked to acquire other companies, but in the end, we did a deal with United Drugs Consumer Division, who is our largest competitor. They equally had sales teams selling into pharmacies. So they actually acquired the distribution rights from us for our products. My team went to work for them. We had an earn out, and Dad went back to retirement. And then I decided to actually move back to London and get back into private equity again when we exited the company. So I have to say it was fantastic to be able to start a family run business, work with my dad, and then also be able to exit it.
It's an amazing story. And I think so. I think you're going to be the perfect person to ask this question to, right? Because you've kind of seen both sides of it, from the kind of corporate finance, private equity side, and then doing the running the business. I'm specifically interested in the intangible parts, okay, of growing the business. So did you have a vision or goals or what you wanted to achieve when you kind of first started it? It would have come naturally to you, your experience in terms of maybe the how the finance would be run, and obviously your dad had a lot of experience in this industry, so being able to sell into them. So the kind of technical, hard, tangible aspects of it, I'm assuming might have come quite easily. What was the vision and the kind of goal, if you like, and that side of things?
Yeah, I think it's really interesting. So as a little kid, I'd always grown up and been really interested in what Dad did. And also my mother, who also worked in a kind of manufacturing business as well. But I think, so I'd always worked around Dad and seen his business. And indeed, when I was like in transition year at school, I used to go on business trips with him and that sort of stuff. So actually, ironically, when I was writing my applications to go to business school in America, they ask you, what would you like to do when you graduate? And I'd written an essay to say, when I graduated, I wanted to come back to Ireland and I wanted to set up a healthcare distribution business with my father to create employment in Ireland and set up a new business. And that's ultimately what we ended up doing in 2010. And I think for me, the vision was really to become a leading healthcare distributor within the Irish market and be able to bring in products that weren't currently sold in the Irish market, but also to be the best at what we were doing, I suppose. So I think for me, it also highlighted that Dad had fantastic knowledge of the industry. He was a great man for knowing what products would be successful, which ones wouldn't. Even unfortunately, he passed away 3 months ago. But until that point, every holiday we would go on, he would go into pharmacies, no matter where in the world we were, and he'd be looking at products and he'd be buying them and bringing them home and writing up the pricing. And even though he was no longer in the industry, he'd be giving them to his friends who were and saying, you should look at that. You might be able to get the distribution rights for Ireland. So he had a great innate knowledge of the healthcare market. I suppose I was bringing the finance skills, some more of the operational skills. So combined, we were a great team and a great partnership. And I suppose it was one of the key learnings for me that when you are setting up a new business, I suppose having a business partner that brings complementary skills, but also that you implicitly trust 100%, I think is really important. Me and Dad had frequent discussions, let's call them, around different ways of how we wanted to do things. Even when it come to exiting, for example, I probably would have liked to continue to stay in and build the business to a greater extent. But Dad, I suppose, being slightly older and I suppose, understanding the industry a bit more, I suppose, was more concerned about the trends that were happening. And he was ultimately the one that really wanted to exit at the stage we did, So I think for me, it was about knowing the industry, but also then having the vision about how can you actually be the best business in the sector that you're operating in. Because I think, I can get excited about nearly every industry, but it's about what gives you that differentiation, what gives you the uniqueness. Why are you going to be better than the other people in the industry?
Sorry to hear about your dad, by the way, first and foremost. Secondly, you may not have any idea, because what I'm going to ask you is, where do you think your confidence comes from, right? But what I'm thinking about when I ask that question is, you're kind of an academic star, if you like. You were probably, first in your class on the way up. Chemical engineering, it's not an easy degree. It's, very, very maths heavy. You got first class honors in that. You went to Harvard. McKinsey's not easy to get into either. You kind of brushed over that. I don't know how I'm sure there was a lot of hard work along the way. But has confidence always been something that came kind of naturally to you as a result of kind of being very good academically and good in this area?
Ooh, It's an interesting one, Conor. I suppose I'm very lucky that I always got a lot of support from my parents, and then my brother Frankie as well. I suppose mum and dad always taught us that they would support us and that we could probably do whatever we wanted to do. And hard work was always a common theme in the family, I would say. I should say I'm naturally quite a competitive individual. So I grew up doing a lot of sailing, and I was very lucky that I not only enjoyed it, but I was also quite good at it. So I suppose that's always been something that's kind of given me that competitive edge. And I think probably when you're doing well in sports, that also maybe gives you a little bit of confidence as well. But I think getting that support and also then seeing the results. I was also the youngest of many, many cousins, I suppose. I think out of my broader cousins, I'm the second youngest. Most of them were boys, I suppose. So I always wanted to be there kind of in the mix, both hanging out with my brother, but also all of my cousins and that sort of stuff. And I think that probably teaches you, some tough knocks, but it also kind of means that you have to stand up for yourself, I suppose.
Yeah, when I was doing the research for this interview, I started kind of feeling a bit inadequate, right? Because
not at all.
But just your list of achievements is kind of it's amazing to kind of to look at and to review. But sitting in front of you today, you're a very kind of normal, very laid back person almost, and it's a lovely balance to have in that way.
Yeah, well, I'm really a big believer in that you should do something that you really enjoy. So for me, I think it's I'm really passionate actually about building businesses. So I get a huge kick out of supporting our management teams and business owners to help them build their businesses. And you could argue, well, you could do that from building your own business, Laura. The way I see it actually is I get the benefit of building the Waterland Ireland business here in Ireland, but also supporting the likes of Rytech, our fire safety business, MTM, our kind of power and data cabling business, Net Zero, which is our building decarbonisation business. Silverstream is a leading healthcare nursing home business. Bellew Electrical is the third largest electrical wholesaler in the country. So I get to support them, I suppose, which gives me, a huge amount of enjoyment. But being passionate about what you do, really enjoying getting up in the morning, and really, really enjoying the people and the team that you work with. I think as we all get older, I think, we have many choices in life, but really, really kind of finding the right team, people, culture is very, very important. But I'm also a big believer in balance, right? So hence why I've always managed to maintain my kind of sailing, and that's really important to me. It's just a great way for me to switch off from work, I suppose, and it gives me that outlet that I need, I suppose. I really like running as well. Again, it's just a way for me to switch off, and my favourite run is down on the beach in Sutton and Howth, where I can run right beside the sea and stuff. But also then family for me is very, very important, So I think I come from a family of lots of cousins, as most Irish people do and stuff. And I think making that time to be able to spend with them, and also then being able to carve out the time for your friends, I think is really important. So for me, it's about kind of, finding something that you really enjoy doing, but having the right level of balance, because I think that's important to be successful, and also for longevity, and also to create the enjoyment that you want out of what you're doing.
What do you look for when you're are there kind of a few things that you have in your mind when you're about to make an investment in a business, or when you're looking at an industry? What are the things that kind of excite you when you start to see? Yeah,
it's a really good question, Conor, actually. So we have pretty clear criteria on the types of companies that we believe we can be the right partner for. And it very much is a partnership approach. So we look for markets that are growing. So we say the market needs to be growing at GDP plus 1 or 2% or so at least. So, it doesn't need to be a super high growth business, but it does need to have some market tailwinds behind it, I suppose. So, for example, with Rytech, fire compliance is increasing, and that means that there will be good growth in that market. MTM serves into data centres, and across Europe there is a lot of growth because of the likes of AI that we were discussing earlier and stuff. So I think, we always look for markets that are growing. In Silverstream, it's a nursing home business. There is an ageing population here. So we look for, what's the tailwind? Why will this market continue to grow? Next, we look for businesses that can make at least 10% EBITDA margins. Why is that? that. We just feel that businesses that have good EBITDA margins will be able to weather the storm if there's a downturn, I suppose. So anything that has very, very slim margins, we're just concerned about if things don't go to plan in the macro economy, will they be okay or not? We then also look for fragmented markets across Europe where we believe there's consolidation and buy and build to be done. So because we're really buy and build experts, we say, okay, we want to back a good platform, a good management team that has the ambition and the desire to really become a European leader. And then we say, okay, is the market fragmented enough? Do we believe there are other companies in the UK, in the Benelux, in Germany that we can put with this business in order to make them a European leader? And I think Rytech, and I know you've spoken to Ted Wright before, I think is a really good example of an Irish headquartered business, headquartered in Mullingar, second generation family business that was founded 40 years ago by Tommy and Mary. Then Alan and Ted bought the business back in 2008, and now we've partnered with Ted to really become a European leader, and they are now one of the leading independent fire safety businesses across Europe. And at this point we've now supported them with 11 acquisitions in Ireland, the UK, Finland, Sweden, and we're also now in discussions with businesses in a number of other European countries.
What did you see in Ted and the management team specifically?
I think with Ted, we saw a great business that had, become a leader in Ireland. They had some exposure to the UK as well, but there was a real ambition there from Ted to really be able to continue to build a much bigger business.
And is an ambition, you've mentioned a couple of times there, is that something, how do you test ambition?
Yeah, it's very difficult, right? But I think, you get to know people. We spend quite a bit of time with the CEO and the management teams to really find out, do they have the same, I suppose, desire to grow the company? Because I'm very clear with business owners that, we're not the right partner for everybody, okay? So if someone has a lovely business and they're growing at a steady pace and they just want to continue to do that, then frankly, they shouldn't really partner with us, right? They can do that themselves. Whereas if they say, do you know what, actually, I want to future-proof my family's wealth. I want to de-risk. I want to take some money off the table, but I still really want to drive this business. And I think there's a good opportunity and I want to build a bigger team and a bigger business. Then I'm like, well, we may be the right partner for that. So I think it's about making sure that everyone has the same sense of shared ambition, goal, vision, because the worst thing that can happen to anybody is you kind of end up doing a deal, you end up partnering, and it's not quite a marriage, but it's similar to it, where suddenly, let's call it, we're 60% partners, they're 40% or so in the business, and suddenly we have a disagreement as to where you want to take the business to. We would never want that to happen. So we always want to have those conversations up front to say, okay, so you're currently doing, let's call it 30 million of revenue. We believe you have the ability to get to at least 100, but probably 150, do you want to do that? Because that has implications. It probably means they might need to travel a bit more. It means they'll probably need to relinquish some control. Their role will change because they'll need to be managing a bigger team. So, for example, Ted Wright would be a good example where, he's now the group CEO and he has brought Yvonne Concannon in to run Rytech in Ireland. So his role has changed there. And some people like that and some people don't want that. So it's about having those conversations up front to make sure that there is that alignment. And I think in general in private equity, the key message is always no surprises, right? You know what I mean? We should have those, frank, straight up conversations. We should all be direct and we should make sure that we understand what everybody wants to achieve. And that can sometimes be difficult because, sometimes, particularly in family circumstances, it's not clear exactly what everybody wants to achieve. But I think Waterland comes from a Dutch and Belgian predominant culture. And I have to say, I really like it. And I think it's great from an investment decision-making perspective because it's all very clear, So that we have the cultural nuance and me and my team here in Ireland, but we also have that kind of clarity from what we're trying to achieve and how we can help business to do so, which is right for some businesses and not right for others.
Yeah, I think Ted as well mentioned he was very happy with the transition into being more group CEO. And I think, well, I don't know, do you find that a lot of CEOs, they do want to change? They're almost, they've spent so long kind of grinding as the kind of main person in the business, and kind of being able to focus more strategically is kind of something that a lot of them want. Do you find that?
Yeah, I think it very much depends on the stage of career of the individual. what they really like doing, I suppose. How much longer they want to do that for, whether they really like being in the detail or whether they're more comfortable taking that more kind of bigger strategic role, whether they want to travel more or not. So there's a lot of factors to consider, I suppose, but that's why it's really important. A lot of this is about people do business with people. A lot of it's about trust. So we always want to spend quite a bit of time before we will agree any deal to make sure that we are the right partners and that they feel we are and that we feel we are, because ultimately, you want to make sure that this is going to be successful, I suppose. And we all know that, particularly for me, I suppose, Ireland is a very small country. I want to continue to work here. I want to make sure that the companies that we partner with are successful, and we will do everything we can to try and make that successful. But kind of partnering up front with the right businesses is a large part of that as well.
When I talk to investors, private equity people, they always have a kind of they can, just like you did there, talk about their criteria, their investment. And when they're talking about it, it sounds easy. You kind of go, wow, God, there's just, I just find these people. Can you tell me just a little bit about some of the challenges and the hard work that goes into drilling down on those few things and finding a correct business to invest in?
Yeah, I mean, as you say, Conor, it's very easy to say these things, but actually the hard work of, finding the right businesses. Are we the right partner? Finding the right team who thinks we're the right partner. I think some of the key things are, we will do big analysis of different markets in Ireland and stuff. But at the end of the day, it's about finding a company where ultimately the management team want to bring in an external investor, because that's a big decision for obviously many people. Indeed, I thought when I was considering, me and Dad, whether we would continue growing our business or whether we'd do a deal with United Drug. So I think it's a big decision, and I fully recognise that. So that can sometimes take many years to actually build that trust and that confidence that we might be the right partner. So I think it's about, finding industries that we think are growing enough, I suppose. Then about finding a platform that we think has the level of maturity and the scale that we can really support. Because if the business, back to your point about why 4 million EBITDA, if the business is too small, we just feel that actually putting lots of other companies together with it, might not be the right thing at that point in time. I think also then trying to make sure that that we can find a situation where ultimately, the management team, the entrepreneur, the family is at a point where they actually believe bringing in an external investor can be the right thing for them to do. So there's many nuances, I would say. A lot of legwork goes into it. I'm very lucky that I have a great team here in Dublin. There's eight of us in the core investment team here based on St. Stephen's Green. We also work with UCD. So each year we take in two interns for 12 months from economics and finance. Emer's our office manager. So I'm really lucky to be supported by a fantastic team. And ultimately, a lot of it comes down to finding those great companies that are led by great entrepreneurs. And I think to be honest, when I was earlier in my career, when I was at Apex, I was a bit naive. I suppose I used to think, how difficult can it be to really grow a business? Suddenly when I had my own healthcare distribution business, and I knew that it was a lot more difficult than I had expected it to be, right? There's a lot of pressure. You've got to get a lot of stuff done. You've got working capital, for example, it used to be Excel lines on a spreadsheet. Suddenly it was me calling pharmacies to get paid to make sure I had enough money in the bank account to pay my staff. Everything became a lot more real. And I think that's made me a lot more empathetic and understanding of how difficult it can be to grow a business. And I think that's another thing about Waterland. Donal, who's my number two in the team, he's a principal. He's also been the CEO of a biotech business here in Ireland, as well as working at CRH for many years in M&A, as well as working at McKinsey. So I think nearly everyone senior at Waterland has either founded a company or run a business, because we feel that just gives us a better level of understanding. But then I think having that complementary team. So Danilo also worked at CRH for about 6 years in M&A. Danny worked at Guggenheim, a leveraged credit fund, for 7 years before joining. And then Jack, Neil and Catherine and Michael all came from either KPMG or PwC or Grant Thornton. So we have a good complementary skill set of, me and Donal are engineers, but then we have a number of accountants, and we've got a number of people who've kind of Danilo studied languages, for example, as well as business. So I think having that complementary team is really important. important.
Talk to me a little bit about EBITDA, okay? And I try to ask as many people who I can about this, right? Because when if you ever listen to Warren Buffett, he has a word for EBITDA. He doesn't like it. He thinks not including depreciation, for example, or amortization in a profit calculation is
yes.
Well, he calls it bullshit earnings. So why is it that private equity companies such as Help will look at that, and why is it important to?
Yeah, I think it's a very good point, and Warren Buffett definitely has a good point. I think we will look at EBITDA, but we will, and that's earnings before interest, taxes, depreciation and amortization. But we will also always look at EBITDA minus replacement capex. So what do we think is the capex required on an annual basis in order to continue? And then we'll also look at actual cash generation in the business, because I suppose Warren Buffett is correct. You need to understand what's the cash really being generated in this company. So we'll look at EBITDA as a proxy for kind of what do we think is the sustainable level of profitability in the business. But we will then also really look at what is the actual capex that's needed, because that's real cash going out of the company on an annual basis. And you need to continue to spend that before you can use that cash for other things. So I think it's very important to look at multiple metrics is what I would say. So we are quite focused on businesses that have, strong real cash generation.
As an accounting firm owner, I'm almost interested to hear, have you looked at an accounting kind of fragmented market? Have you looked at any of that across Europe at all?
Yes, we have actually. So when I say actually, we have the 5 main platforms here in Ireland. We also have a number of other investments. So for example, More Ireland is an accountancy business headquartered in Cork, but based here in Dublin as well. And they've actually now done two additional add-ons in Ireland. And that is part of a much bigger European accountancy platform that Waterland is partners in.
Okay.
Called More. So back in 2020, we were probably one of the first private equity firms to start investing in the accountancy sector across Europe. So we have had many discussions with multiple regulators in multiple jurisdictions around whether accountancy should be owned by accountants or whether private equity is a good model for accountancy firms. So yes, we've actually we have More, which is headquartered in Belgium, but also More Kingston Smith in the UK, More Ireland, More Northern Ireland, but also we've now expanded that platform into also Germany, the Netherlands and Spain as well. But separate to that, and it might sound a bit crazy to some listeners, but we also have another accountancy platform called Cogep in France. We have another accountancy platform called De Jong and Lang in the Netherlands as well. And only earlier this year, we exited an accountancy platform in the UK called Cooper Parry.
What do you like about and this is just, I suppose most of them come from a partnership model, and I don't know exactly how it all works at the larger scale, but a lot of the profits are going back to the partners, and I don't know if they sell out at the end of their career or whatever happens. Where's the kind of the entry point for a private equity into this and the kind of getting a return from it?
Yeah, so I think you're dead right. So the traditional, let's call it professional services firms model, is typically that annual profits get dividended out to the partners on an annual basis, I suppose. When you think about doing a deal with private equity, the structure of that needs to change and the profits need to be retained in the business instead of getting dividended out on an annual basis. But that can be beneficial from a tax perspective potentially, because maybe people can get proceeds on a capital gains tax basis instead of an income tax basis. But you're dead right. It changes the income stream for partners. What it typically means is that, let's call it, we come in a partnership approach where we will maybe be 55% owners in the combined entity, and the partners in the accountancy firm will then retain 45% ownership. They will be de-risking. They will be taking money off the table. There will typically be an allocation of shares left for future partners, so maybe directors, managers who will want to become partners in the future. So I think there'll be an allocation left for them, and then it'll very much be a combined approach around trying to build a business, and ultimately there'll be more acquisitions brought in. In accountancy, for example, in some countries, it can be quite accretive to acquire smaller businesses that you're then bringing in. You're able to either merge back office functions, you're able to bring them into the same office maybe or so. But it's definitely a trend that has really happened, I would say, over the past 5 years, both in America as well as Europe. And there's obviously been a lot of high profile transactions that have happened.
But you like it as a platform industry?
Yeah, I mean, I think why do we like it? So we like professional services in general. As a firm, we've done a lot of human capital type businesses, I suppose. Why is that? They're quite cash generative. Our partnership model means that we are very much partnering with the key people, and that's a key thing for us because ultimately, professional services firms are based around people. So you need to make sure that the people are fully aligned with you going forward. So I think making sure that you have that real kind of economic partnership. Also that, that there is a good thesis around the buy and build, that the cash generation will be there. And ultimately, I think when it comes to some professional services firms, there has been, I suppose, some areas where there's been expansion of accountancy firms, maybe into more CSRD, maybe some ESG, maybe some cyber type stuff. Typically smaller accountancy firms, maybe they're more focused on the financial accounts and the audit. But if you bring them into a bigger firm, there might be cross-sell opportunities around tax or corporate finance or cyber or ESG as well. So we feel that there can be good just economies of scale and cross-selling opportunities.
Tell me about Harvard. So I don't know how many Irish people were in the MBA program at the time you did it. I'd imagine there wasn't that many aside from yourself. What was it like going there and kind of getting a feel for the culture and everything?
Yeah. So I suppose, how did the journey come about, I suppose? I was on a holiday with my mom and dad and my brother back in, I was 16 years old. So I think it was about 1994 or so. And we went on holidays and mom brought us out to Harvard and we had a wander around and everything. So that was my first experience, I suppose. Then I was very lucky when I went to McKinsey. There was a kind of route that if you did a good job as a business analyst, they would support you through an MBA. So I knew a lot of people who had gone and there was a lot of support. Indeed, I remember when I was writing my application essays, I'd left them a little bit late over Christmas and I sent them to an alumni who I was working with and they were very good. I remember specifically on the 26th of December, they came back to me with a whole page of comments on my essays and they said, Laura, you're targeting an American audience here. I understand you're from Ireland, but you need to talk this up. You need to tell them how amazing you are. And I was like, we don't do that really in Ireland. And they were like, yes, but you're applying to an American business school and you have to do that, So I had a lot of support, which was great. And I suppose even when I was lucky enough to get accepted, I went over for the admit weekend when you're still trying to make a decision whether you'll go or not. And there was, at that point, there was probably 10 Irish people who were currently doing their MBA there. There was 8 people 2 years ahead of me and 2 people the year ahead of me. And they were really good. So they showed me around the whole campus and explained to me what campus life would be like and how that would work. So I then decided I would go. There was one other Irish guy called John Doran who was in year with me. But you're right, there aren't that many. There's probably 1 or 2 Irish people typically in each year. There's been a number of years where there's been exceptions, like the one I mentioned where there was 8, but in general it's typically 1 or 2. However, I was very lucky because I knew a number of people from McKinsey who were also going, and then literally you're put into a section where there's 90 people and you're with those 90 people for the first year. Every day you've got lectures, you need to do some pre-work, you need to read some cases every morning and stuff and every evening. So you get to know people incredibly well. So I would say, it was a really good experience where you not only learn a lot tangibly about finance, about marketing, about entrepreneurship, but also the whole experience. Indeed, the kind of connection and networks that you make are amazing. Indeed, a good friend of mine just had a birthday party. He lives in America, but he decided to have a party down in the south of France. So I was just down there with about I think there was about 50 of us who'd been in business school together who were down there a few weekends ago, and every 5 5 years, Harvard arranges alumni reunions where you go back onto campus in business school, either in June or September, and you get back together with all of your old classmates. So I would say it's actually, it builds lifelong friends, as well as kind of learning a lot, but also really, the experiences that I had were fantastic. I got to row on the Charles River. I got to, run the New York Marathon. I got to go on so many different trips. I went on trips to Austria. I went on a trip to Saudi Arabia that was organised by one of my classmates. So it really gave you exposure to a lot of new experiences.
A lot of what I hear about it is that the real value almost comes from the network that you've built and the kind of, again, almost the intangible things. But can you think back to anything specifically that you learned that you'd still use today, a kind of tangible, almost boring thing? What did you kind of pick up as you were going through the program?
Yeah, I mean, I think so. Harvard is mainly done through the case study methodology of teaching, which means basically a professor has worked with a company, has really understood their business model and has written the case. Then what we typically do is you read the case, you maybe do some analysis on it, and then the next day in class you'll come in for a 90-minute period and discuss that. And sometimes the CEO or the protagonist from the case will actually come in and join the discussion. So you're really living real-world business examples, I suppose, and talking through, if this product recall issue were to happen in your business, how would you deal with it? What would be the potential challenges? What would be the opportunities? And what would you do if you were the CEO of that business? So really on a daily basis, in multiple cases, you're kind of thrown into a real world business scenario and you have to discuss what would you do if you were part of this company. So I think it really teaches you a lot about different business models. But for me, I suppose I really enjoyed the entrepreneurship classes because you were exposed to a huge amount of business owners, entrepreneurs who would come in and talk to you, coupled then with, finance was the other area that I focused on, and just really trying to understand, where can it be beneficial? What are the different types of funding models? What are the key things that you need to watch out for? How do you value businesses? And what are the different methodologies in valuing things? When is different things appropriate? So I worked with a number of kind of great finance professors who taught you a lot. And then I think the other one was really around macroeconomics. I had not come from an economics background or business background. As I say, I'd done chemical engineering. So really trying to understand the theory behind kind of macroeconomics and everything I thought was quite interesting. And there's clearly very different philosophies, I suppose, around that. So I think now when we kind of see the global financial crisis obviously came through just after I graduated. And obviously, a lot of us in the Western world have huge debt loads. Now in Ireland, we're lucky that we are running budget surpluses at the moment, but really trying to understand how does that play out in the longer term, I think is quite interesting to understand.
Was it useful when you were running the distribution business with your dad? Like, can you remember things coming up like, oh, this is similar to, a case that I learned?
Yeah, there was definitely, we even did a case on Ryanair, but we did multiple different cases on different ones. We did a few cases on CVS, which is a big pharmacy group in the US and stuff. So yeah, there was a lot of examples, But I have to say, real world examples and actually living through it, and Dad's experience was even probably better than the Harvard MBA experiences, So I'm always a big believer in real world experiences and real world learnings as well.
What about McKinsey? Because everyone that comes out of McKinsey seems to just be almost business savants. They just understand everything. They can take a view so easily, and they can kind of just see the metrics almost. Can you remember things that you picked up there that were?
Yeah, so I think McKinsey, I would say, is it was an amazing experience for me. When I joined, they sent us on a 6-week business training period up to Oxford. We used to get training every Friday morning. So there was a huge amount of just knowledge that you gained through that experience. But equally, I think where McKinsey is fantastic is the analytical approach, really kind of trying to understand things, trying to benchmark businesses against other companies in the sector. Why is the SG&A higher in this business than other ones? Okay, that gives us a benchmark. How can we get it down? Or where, what's the R&D in the different pharmaceutical companies? Why are some higher than others? Should we be increasing or reducing it? So I think that analytical approach, being robust, triangulation, always trying to make sure that your facts are accurate, I think was something that I learned. And back to the confidence point, I think McKinsey was probably a key area where I gained confidence. I always remember thinking to myself that, if I went to my manager and it was maybe, 6 p.m. in the evening or something, and I wasn't very confident in the analysis that I showed him, I was probably going to end up spending a large number of hours in the office trying to get it right for the next day. If I went to my manager and I was very confident and I explained exactly what I thought and why this was the rationale, I would probably get that accepted. So I think definitely McKinsey probably taught me a lot of confidence, but it also taught me the importance of being impartial and really looking at data sets and trying to analyze them to make sure that you are understanding what is the kind of right theoretical outcome, I suppose. I think, as I say, where I think some people love staying at McKinsey, others kind of want that bit more hands-on operational implementation. But over the years, actually, the likes of McKinsey, as well as many other professional firms, have kind of now gotten into more implementation phases.
Was it difficult at all coming in? Like, obviously, like chemical engineering is very different to probably what you would have been doing in McKinsey. Can you remember any challenges kind of getting up to speed with the business side of things?
Yeah, it was very interesting. There were 32 of us joined the graduate programme at McKinsey in London back in September 2001. And over half of us were all engineers. I remember when I applied, I thought, I said in an interview, I said, you probably think this is unusual that I'm a chemical engineer and I'm applying to come and work at McKinsey. And they said, no, not at all. And it was really only when I joined that I realised, actually, the likes of McKinsey are more looking for people who are analytical, who can logically think, who can solve problems, who are robust in their analysis, who are hard workers, I suppose. So actually, they're very prepared to teach all those business skills, hence why they send us on the 6-week business training program, hence why there would be training every Friday morning, hence why each year they would send you on a 1-week training course. And a lot of it comes from learning on the job as well. So I think yes, there was a lot of business stuff that I needed to learn. You're given a big wad of books, some of which I still have now, actually. And I think they're kind of tangible things that if you're interested, I believe you can learn most things about most businesses in a relatively short time period if you're very interested in doing so.
Do you focus on culture at all when looking at a business? And if so, how do you kind of I suppose, get your finger on what is kind of an intangible area? Yeah,
I think that's a great point, Conor. I mean, I think culture is really, really important. I find culture in both my own team, but also the businesses that we partner with is very key. As I always say, I think you want to be working with people who you professionally respect, who you admire, who you share similar values to, I suppose. We don't need to be best buddies and go to the pub every night, but we do need to really respect each other and, enjoy being in each other's company. But I think a lot of that comes down to sharing similar values. So I think it's about spending time with people. I think it's about referencing people. It's like I always encourage people who we're thinking of partnering with to speak to the CEOs of the companies that we've partnered with, to speak to other people about what we're like to do business with. Because it's one thing me saying, hey, listen, I'm a nice person to do business with and I'll always be fair. It's another thing other people that we've actually genuinely partnered with that they can come out and tell them. So I think it's about doing, to be fair, the triangulation around multiple data points. I think, both trying to chat to the management teams, really understand how have they reacted in different environments, how have they reacted to different business challenges and opportunities, have they had conflicts with prior shareholders, I suppose, or people who've worked in the organisation, how have they been dealt with, but then also trying to understand people who will be suppliers or customers into them, I suppose, what's their view of the business. So we will always speak to quite a few people. We obviously need to keep everything very confidential, but you can typically just ask some questions and get some interesting responses.
Do you have a list of values, like a checklist almost? And it's probably it's qualitative, I'm sure, the questions and the responses you're getting in those, but is there anything that you're kind of looking for, like honesty, for example? I don't know.
Yeah, I mean, I think I'm not as prescriptive as that, and maybe I should be. So it's a good point. But I think honesty, integrity. I think having good aligned values, being a good team player, being able to show good leadership. I suppose being tough, but being fair. I think that's always, I think that's reasonable. In business, we all need to have tough negotiations, but you always want to make sure that people are being fair as well. So I think, yes, we want to make sure that everything in the businesses are, I suppose, compliant and clean, I suppose, is very, very important. And I think having those kind of, good kind of values where ultimately we can get comfort that ultimately, if things are tough, and we'll all have tough times in business, right? You want to make sure that we're all going to be pulling together and there's not anything then comes out that's been hidden from us or anything. So what I always say to people when we're in the process of doing due diligence, so making sure that everything in a business is okay, is that, just tell me anything up front, right? Most things we can deal with, but if we suddenly find things that have been hidden from us or there's surprises, then that begins to break down trust. So I think trust is really, really important, and that comes down from kind of building that sense of shared values and having that honesty, the integrity, and having the tough conversations up front.
Have you ever had trouble having tough conversations?
Listen, sometimes none of us like having tough conversations, right? But I am a big believer in things do not get better with time. So I think it's much better to be honest, to be upfront, to give people, for example, feedback in the team. I think it's much better to give people feedback early. I think if it becomes clear that something's not working out, sitting down, having the conversation, trying to figure out what's not working, what needs to change, I think is fair to both sides, I suppose. So yeah, there's definitely things that you'd say, do you know what, I'd really rather not have that conversation tomorrow. But I really am a big believer in putting things off is not going to make them any better. So it's fair to everybody to have conversations. And for example, I think, if things aren't working out, what do we need to do to try and change them? Let's give ourselves the opportunity to make sure we can address them. And that could be with individuals. It could be the business model overall. It could be, listen, there's a project that's not going well here. We need to deliver on the project. We need to deliver it for our clients. How are we going to try and get out of this project with, some level of profitability, and that we can really say that we have delivered it to the best extent we can?
Can you remember how you learned that things don't get better over time? Because I think I've definitely experienced it a lot where I've put things off and I've just, and they've just ended up being a disaster. And I've thought, if I just dealt with that at the time. So I've kind of learned it the hard way, and I'm almost ashamed to say that I haven't fully learned the lesson yet. But
I think Conor, I would be guilty of that as well. There's still scenarios where I say, Laura, you should have had that conversation earlier. You kind of knew it. You should have had the conversation earlier. I think a lot of it comes through experience. I think a lot of it comes through, as you say, learning from painful experiences, and that can be both professional and personal. I am, as I say, I'm very, very lucky that because both my mom and dad, worked in business all their lives. My grandmother was a great entrepreneur, and she learned through the school of hard knocks. My father was born in 1940. His father died 1 year later, and Granny was left with 6 young children, and it was war times. So she very much had to figure out and she was not working at the time, so she needed to figure out how to become an entrepreneur. She moved the family up to Skerries. She opened a shop. She worked incredibly hard in the shop in order to be able to feed the kids and herself. And I suppose, I always learnt both from her hard work ethic, but from, the commercial, practical, pragmatic views. And I think, there's a lot to be said from a lot of great Irish business owners who've really kind of have a lot that I can learn a lot from, I suppose, who've learnt from practical experience is one of the best ways to learn, I think.
Why did you come back to Ireland from London? What was
after we sold our small little healthcare distribution business DSI, I went back to London for 5 years, and I joined a firm called Riverside, which is a private equity firm quite similar to Waterland. We partnered with a business in Carlow called Netwatch Group. So we partnered with David Walsh and Niall Kelly, who have a great business in video surveillance, and we supported them to buy 2 businesses in America. So I was then lucky that I used to come home to Ireland every month for board meetings. And to be honest, I didn't necessarily see a route home for me with private equity. Equity. So I thought I would end up staying in London. But as I say, my parents were getting older. Most of my family was here. So I always liked coming home, I suppose. And then at the end of 2019, I got a call from someone and said, Laura, we know you love London, but would you consider moving back to Ireland? And I was very honest with them. And I said, listen, I'd like to move home. My family's there, but I will only move home if it's a good career opportunity for me. And I don't frankly see a route home in a senior role at a private equity firm in Ireland. So eventually, after much discussion, they said, Laura, okay, well, if a new firm was opening a new office and they were interested in talking to you about running that office, would you move home? And I said, yes, that sounds like a good opportunity from a career perspective. So I was very lucky, actually, the way it came about. I'm a big believer in fate. I think things happen for a reason. We don't always know what that reason is. But, being able to move home in March 2020, it was challenging, because literally I moved home. We had one company in Ireland, which was Silverstream, the nursing home business. So literally I joined on the 16th of March 2020, and my UK and Dutch colleagues were suddenly like, you're in Ireland now, you can look after Silverstream. It was COVID, and that was a challenging period, as we can all remember, for all healthcare businesses and indeed for most people in general. But we got through that, and over the course of the next kind of year or so, I recruited Donal to come and work for me in the November. Danilo joined us in the following February, and over that time, we've built up the team, and we've also built the portfolio companies. And I have to say, COVID was a tough time for everybody, but it was a great time to be here in Ireland, and lovely to spend time with family, and also a good time to be building the Waterland business here. We've now been here for 5.5 years, and touch wood, it's going well. But we're still very much in the building our reputation, trying to partner with more Irish businesses. I think we've got a lot of great Irish companies that we really believe can become European leaders here. And I'm delighted to be here to be able to support Irish companies to really realise their potential.
You said something really interesting there to me, right? Because I think when, as I said, I was feeling kind of inadequate doing the research for this, looking at your professional kind of track record. You're an investor. You're a very obviously rational person, because you have to look at the facts. You're data driven, analytical, and you said there, I'm a big believer in fate and that things happen for a reason. Tell me just a little bit about that side, because I think it's an interesting mix to have both.
Yeah, I suppose I genuinely believe you need to work hard. You need to position yourself for opportunities. But, we all need a bit of luck at different times as well. So I genuinely think, if you try your best, if you work hard, you position yourselves for, either deals I'm working on or opportunities. But there is that element of luck as well, right? So I do believe that there's kind of someone looking down from above, and kind of, if things are meant to be, if you've done everything that you can do, then they'll happen. And if for some reason they don't happen, there's some reason that we don't know at the time, but maybe there's something else will happen instead. So, and I have that philosophy literally around most stuff, around business. I think we all need to try and work hard, but I do believe that certainly some things, we can't explain, I suppose. So it's how I rationalize things, I suppose, and I think I really do believe things happen for a reason, and it's at the time we don't always know what that reason is, but I believe that somebody does, if that makes sense.
Is it? Can you remember? Is it from your upbringing or?
Yeah, probably from my upbringing. I definitely my mum and dad and broader family. We'd all be. I suppose I would have all. I would have gone to a convent school, Manor House in Raheny. My family would be quite religious. My mother would still go to mass most days and that sort of stuff. She'll pray for us to make sure we're all doing well and that sort of stuff. And I suppose I do believe that I don't always understand why good or bad things happen, but I know there's been things throughout the course of my career where I've needed a bit of luck. I got a bit lucky that Waterland wanted to open an office in Ireland, and they offered me the role to move home, I suppose. Even when I look back at making the decision to get into business after studying chemical engineering. And, as we've discussed, I've done a bunch of different things throughout my career. I've taken chances on some of them. Someone's contacted me about a role sometimes. I've been lucky that I got into Harvard, and we need to make our own luck, but you also do need a bit of luck out there as well.
Laura Dillon, it's been a pleasure talking to you this morning. We're here on a Saturday, which is rare for me, so it was great to do it with you, and thank you very much for coming in today. Just let's finish up by, if you could talk a little bit about Irish businesses, what Irish businesses can gain from private equity and from working with Waterland.
Excellent. Thank you, Conor. And also thank you so much to your time. I'm delighted to be here today. So I think that, historically, I would say until about 15 years ago, private equity did not really exist in the Irish market. ISIF seeded a number of funds, and I think there's been a number of great examples, the likes of MML or Carlisle Cardinal or Renatus or a bunch of the different funds, who've been around for quite a long time, have really helped to develop the Irish private equity ecosystem. And there's been a number of very successful exits, which I think then have meant that other entrepreneurs talk to those entrepreneurs who've had successful exits and say, oh, what was all that about? Maybe there's something that I should consider. So I think private equity is another option out there on the table for entrepreneurs, family businesses that maybe wasn't there 15 years ago. I think historically there was maybe family investment funds here in Ireland and stuff, but there wasn't the same level of institutional private equity. And I think it gives an opportunity for people to be able to continue to grow their business, continue to run their business, but maybe not have full economic ownership anymore, but they still maybe have a significant shareholding. And they've already then taken money off the table. They've de-risked. And what we certainly find with the businesses that we've partnered with is suddenly when people have, paid off their mortgages, they've sorted out the family, maybe, parents or grandparents or siblings have been able to sell their shareholding and focus on other business ventures that they want to, or personal things, that the level of risks people are prepared to take can change significantly. And it's not that anyone's been reckless in any manner, but I think it just means that actually, okay, I'm not betting my house on this anymore. Suddenly, actually, okay, I have a supportive partner there who has a stronger balance sheet. And if we want to take on bigger projects, for example, I know that we're able to fund them. Whereas, maybe if all of my wealth, and I can relate to this when I was giving personal guarantees on my own business, if all of your wealth is tied up in a business, you're probably a little more hesitant to take some of those bigger risks. So I think it's about, an option on the table. And what I would say is it's always good to talk to people, right? I'm a big believer in always having lots of conversations. I always learn something from nearly every conversation. And I think it's about, entrepreneurs, family-run companies, founders, talking to other entrepreneurs who have partnered with private equity to understand what they liked, what they didn't like, I suppose. And at least then, you're engaging in the conversation that it might be correct. But as I say, private equity can be great for some businesses, depending on what they're trying to achieve, but it's not right for many businesses as well.
And for anyone who wants to see a clear example of this, they can listen to the Ted Wright episode of Irish Business Builders to see how it's gone.
Exactly. Yes. And, I think I'm very lucky. Ted at RightTech, Brendan at MTM, Boyana at Silverstream, Ollie Bellew at Bellew Electrical and Rory at Net Zero. They're all great entrepreneurs. And, I think all their teams are very good. So I would always encourage people who are considering private equity to talk to other CEOs or teams of businesses where they are backed by private equity to understand the good and the bad, because I think there's still that probably, I suppose, misconception sometimes out there about what private equity is and isn't, I suppose, and I'm a big believer in always having the conversation.
Laura Dillon, it's been a pleasure talking to you this morning. I've learned a huge amount. You said you learned a lot from every conversation. I'd say I learned more in this one, but thank you very much for coming in, and it's been a pleasure. Wish you the best of luck with Waterland in the future.
Well, thank you very much, Conor. It's been a real pleasure this morning, and any business owners out there, I'm always keen to have a chat.
Talk soon, Laura.
Thank you very much, Conor.